Good evening, all. Ira Epstein with your Spider ETF wrap-up for this terrible Monday trading day. Wow, what a big break we had on May 9th, 2022. And it's just a sea of red with one exception on this screen, BND. So where traders ran in the crash that took place, they ran to the safety of TLT, AGG, BND, anything with U.S. Treasury name on it. Everything else, wow. Here's your other green TLT, but everything else got hit and hit hard. When we look at AMD, it too got thrown back, and you can see now you're back into a downtrend. Lower highs, lower lows in the chart picture. When we take a look at where you're at, you were fighting to keep the 18-day average above it. You failed there, but you're still not under these lows, so I'd be watching that pretty hard too. You haven't hurt the market in any major way as I'm seeing it. Caught sideways action? Yeah, I think you could argue the sideways right through there. And momentum just sort of flat now, not doing much one way or the other. Then AMC. I had thought the market would do a better job of trying to hold the Bollinger Band bottom, but it's not. So these are new lows for the move. You know how bearish I am movie theater stocks, but I'm also have said, and I won't forget that I said it, that we're at the point where you're going to get the Maverick release and other releases, and there's going to be some good box office attendance. We're also at May 9th. A lot of kids are going to be out of school soon, so you'll see the numbers start creeping back in. That doesn't change what's wrong, the cancer of this industry, and it's that it's too difficult to go to movie theaters. They're too expensive. COVID certainly did them in. Taking your family there, have you done it? The kids want popcorn, they want candy. You've got to park a car typically. If you go just with your other important person in your life, you still got to pay a babysitter most of the time. You know, it's no longer, hey, it's going to run me a few bucks, let's go to a movie. That is the problem. They've got to find a way to get around that. Apple's the stock that everybody wants to own regardless of the price. It's going to come back. It's going to do this. Okay, that's a pretty expensive way to look at it. You were just in the market up here into the the 160s, and now you're back into the 150 range. Now you are at the lower Bollinger Band. The market has done a wonderful job of each time it hits that number, it holds it. Yes, you can get your breakthroughs, but the market does a good job of coming back. The problem with it is that everything's on the chart not lining up. You can pretty soon get the 18-day average under the 200. What's going to make this pop? Maybe a new release of the Apple, 14 going to come out? And that probably does the job because I'm number one client. I want to get rid of my phone, but I don't want the latest version. I want the next one that's got the other enhancements I need. I don't care if my battery lasts a little bit longer, and the camera means little to me. It's all the other features I want. Disney just keeps getting smashed here. They have not resolved their problem with Ron DeSantis. It's a big battle. It's embedded. Embedded means it's getting sold on the rallies, and until it runs its course, it hasn't finished it. Is the market still bearish? It is. XLF, oversold, in a downtrend. You're into a zone where the market finds its support, Bollinger Bands. You stayed under it a little longer than I thought you would here. You had one pop and came back down. But the market reasserted a bearishness, but an oversold bearishness. I don't know. I think it's time to walk away from that. XLI, the industrial sector, well, right back to where I thought the market would go. I've got to fix that. To the lower Bollinger Band, maybe it'll give us a bounce out of that. It should. That doesn't mean I'm bullish. This is where I think the pros took off their shorts if they went short on this rally up here, coming back for it. I, by the way, had no way to call that being a short because the market wasn't embedded and it didn't have lower highs, lower lows. It just wasn't the trade setup. Semiconductors, a massive failure in this market when the market got underneath this low right here. That just did the whole thing in. And now you've got sideways action. Now let me give you the real bad news. One more day where you close down, get a close lower than today, a low lower than today, and you close in the bottom quadrant, I get a downside breakout for fresh move to the downside. Tomorrow's a crucial day in this market as a chartist. You generally don't get that, but if you do, pay attention. It could be something very serious. In the home builders, you're just caught between upper and lower Bollinger Bands in the sideways action. We know that there's not enough supply to meet demand, but interest rates are high enough where you're weeding out how many buyers there will be and so on and so forth. And you're seeing that play itself out in whipsaws that are nearly impossible to trade. On the energy market, what goes up eventually corrects. That doesn't mean it goes to a bear market. A correction in a bull market is normal. You had an overbought condition, you're getting a pullback, you're caught in a widening of the Bollinger Bands, but the fundamentals are there. And what do you think happens to oil exports and imports, both sides, when China comes out of the zero tolerance policy and there are 23 cities that do all this industrial makeup get back to humming? Well, you're going to get demand for this product again. Keep your eye, remember that. I have a general upside bias, especially if you're looking at the longer term charts. In the gold market, and I'm not in that camp, I've told you, gold's fighting too many battles that are all bearish. It doesn't rally and keep rallies off Ukraine. You had one rally up here. That was the ball game. It's now fighting continued central banks around the world raising interest rates. And while inflation is soaring, it's also about to peak. I know you don't agree with me. I do believe that. I think that we're very close to the worst of the inflation readings in looking at the futures markets. So we'll see if that education of mine over 50 some odd years is right or wrong, but that's what I'd expect. That does not mean we've begun a trend down. In order to start a trend down, you got to go in phases. You go for an uptrend, you stop the uptrend, and then you decide, you got another level to the uptrend, or do you begin a downtrend? Got to get to the first end of one of those. GDX. I've had my traders very bearish on this market and the way it's gone. Same in the gold. If you're a subscriber to my morning videos, the videos, they're there. They speak for themselves. Copper's a difficult one. This was one of my favorite markets. It's also one I bailed on and told you, how can you be bullish when they shut down first Shanghai, then Beijing, and you're trying to tell me, and by the way, that's the two big cities you hear about. 23 total cities in China got the zero tolerance lockdown. A lot of those are industrial cities. So the supply chain issues, the demand for copper, the demand for coal, the demand for iron ore, it all fell apart. Now you got to start watching, when do they start lifting these different areas? And they'll go in segments, because one city might get the zero tolerance saying, hey, we're there, let's do it. But in order to get the full demand for copper and all the cities got to come out of that so that you have a humming engine and away you go. Then the copper market comes alive again, in my opinion. Bonds and notes, whether it was today's break or whatever, you don't stay under Bollinger Bands more than 5% of the time. Now, we don't, or we do, have an embedded reading. I can't show it on this. This thing's not working the way it should. But we don't. You got to wait to see what that's going to do. In the dollar, still embedded. I'm bullish. I think traders will buy this market tonight. They'll play it that if the red line closes under 79, they'll disappear on the trade. And on the FXE, they'll decide, do they want to own the dollar or do they want to sell the FXE? I don't recommend both. 40% of the dollar index is made up of FXE. Trade one or the other. Don't trade both. You're betting against yourself. It's not the best bet you can make in markets like that. You put it together, this is what you've got. And being a spider ETF guy, I'm putting out so many recommendations in this that I want you to see what we're doing. And I've got to say, knock on wood, it's been interesting because I've been around them. I know what a bear market looks like. I know how to talk to you about a bear market. I know how to say, hey, you get these flashes where you get the rise in it. They don't last in a bear market. They're a one-day event, maybe a day and a half, and then they're gone. The market's going the other way on you before you know it. Remember the breaks that you had in the bull market? That's all they lasted. Then you came back. You're in a bear market. Learn how to get ideas from a pro that's been around them. I'll explain what I'm seeing in the marketplace. Sometimes you don't want to do anything. That's fine. And other times, all of a sudden, I'm saying pull the plug, make your move in this market. And I'll base it on daily charts and or weekly charts, give you the ideas as to why, the stops that go with it. How do you get to see all this? It's so simple. Just take your cursor, move it up right here, follow the dotted road. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.